Welcome back. Good day. Well, good evening. How are you all doing? And for my Nigerian folks, good morning. Right. So, how was yesterday trading, which is probably today trading, right? Because we normally do this video to prepare us for tomorrow. Well, I hope with what I'm doing here is not affecting your own personal bias. Okay, any day our bias did not correlate together, I will just tell you to stick to yours. All right. Let's say if you are bullish and I'm bearish, you don't have to become bearish because I am bearish. You stick to yours. All right. If you made a mistake, the highest thing that can happen is that you will take a trade and you will lose. Right. That's just the highest thing. That's why you need to engage with the minimum amount of risk you can allow, especially if you're a beginner that don't want to use demo. And I promise you guys, demo is the best way to do that as a beginner. Alright. I know the economy is hard and everybody's trying to find a means of earning in dollars or earning higher income and other source of income. But if it will be very bad if you bring that money and you lose it. Alright. So that is it basically. We have a lot to discuss today. So if I have anything to say, I think I will have to do that after the video if the time still permit me. So I will go right into what we have today. So what you're looking at currently is the Euro US dollar. Now, the Euro US dollar daily contract for Tuesday 6th of February 2024 did deliver as call out from yesterday projection, but we end the day with a bullish candle, even though it went to our draw on liquidity, which is the equal lows. It just swept the liquidity and priced back into the range. Now, I am very pleased to see Euro swept the relative equal low, which is the sell side, and price higher to fill in the inefficiency in price. Now, meaning that today price, yes, we did sweep this equal low, which is this low and yesterday low. So we swept it just with an inch and also priced into this monthly fair value gap. Okay, there is a monthly BC here, which might result to a short time higher delivery in price, like short time reversal. All right, because I am not seeing any higher bullishness on this pair. So we might just indicate that as a short time reversal, then a further continuation in price. Now, since the weekly projection is bearish, I would like to say I don't have a bias tomorrow. That is, I don't know if it is going to be a bullish or a bearish day. But I do know all the liquidity PDRAs in price, and I will be observing how market react to it. Then if it makes more sense to me on a lower time frame, I can go with the minimum, with the least amount of risk. Okay, what I mean there is that tomorrow, going in tomorrow, I don't have a bias. Now, we just tap on a monthly fair value gap and we have daily bearish fair value gap. This is a bullish fair value gap, this is a bearish fair value gap. So are we supposed to say we might see a consolidation even if we take previous day high, like which is today high? The difference between the open of today and previous day high is not much. So yeah, even it is a draw on liquidity, even though we see that as a draw on liquidity, we can't bet on it because the distance is not much and you don't want to be risking for such kind of thing. All right. I don't know. People do it, but I don't do that. So I'm looking for where is the high, at least the highest amount of swing in price, like the highest amount of expansion in the daily price. So if I favor or the upside on the daily, I'm referring to the daily. We might go on the lower time frame and see different thing, but I'm referring to the daily. So if we go on the lower time on the daily, if we price into this bearish fair value gap? Will it lead us back into this monthly bullish fair value gap? I don't know. So that is it for this. Now, casting forward, we have a daily ICT fair value gap that is formed in today price, which is what I'm just referring to, and I am anticipating to see it hold price if the algo is bearish. And also, a daily ICT bearish order block formed on Thursday, February on 1st of February 2024. Up close candle should form a characteristic of an ICT bearish order block. Now, I'm referring to this particular order block here. This up close candle is formed on 1st of February 2023. And also, this line here indicates the difference between the upper week low and this previous and this new week. So if we are supposed to have an efficient price delivery on the weekly, then there must be a reason for us to get here above, a little above this price, all right, so that we can have efficient price delivery. Go to your weekly time frame and you get what I'm saying. That is, if the weekly is not willing to create a fair value gap, then we have to, look towards that as an efficient price delivery on the weekly. That's, there might be a willingness for price to come here. Now, note that this is a short time correction in price. That is, even though we are looking forward to for price to get here, it will definitely be a short time correction on price, and this will be a higher resistant liquidity run on the daily. So on, even on a lower time frame, because it is going against our bias, all right. Because looking at things now, we haven't actually take all the liquidity here, right? There's still more willingness for price. We just sweep a little bit above the low. So if at all we swoop in and at least get into the consequent encroachment of the fair value gap, I might see that as, a potential run up a little bit, impulsive. But with the way it is now, there might not really be an impulsive move here. So is it not better if, let's say you have work that you are doing and you don't have time on price, it is better tomorrow you just stay out of the market, right? Yeah. So let's go to the XY, which is the dollar index, and see how they are correlated. So, all right, this is the dollar index, and dollar index, the daily contract for 6th, which is Tuesday, February 2024. Now, we can also see how bearish the market is on the dollar index, and we have the weekly opening gap. So, we might come back and refill all the inefficiencies before going higher. And plus, we have this bullish order block here, and also if market want to have a weekly a balance on the daily, we might also want to look out at this area as well. So it might also support price to have an efficient delivery in price. So that's basically what I'm, looking out for. So if even if it is bearish, it's kind of relatively slow, and we should not expect much volume in price. Although I don't know, we might eventually even come below here, but we are talking about what is reasonable, and we're also talking about the highest time frame draw on liquidity. And also, this is the monthly fair value gap. We just tap on a monthly bearish fair value gap. So is this going to lead us below? We don't know, but let's see how tomorrow goes, or how this week deliver. Then that is going to tell us more if this is actually a very potential draw, like a very potential reversal in price, or continuation on lower price delivery on monthly. All right, so that is it basically. Let's go to the 4 hourly contract on Euro US dollar. The Euro US dollar 4 hourly contract shows nicely the price delivery for today trading, and on the 4 hour we can see that we use the 4 hour ICT fair value gap or CB call out yesterday to deliver the decent sell program in today price, and also that euro swept also lead to the sweep of the sell side liquidity and price rally higher afterward, meaning that this fair value gap we call out yesterday, we can see how it lead to a decent sell program that lead to the sweep of these equal lows. You can see how thick, just one tick below those equal lows. So that is just a short liquidity sweep, and also creating the idea of equal lows or support. Retail traders see this as a support, that we have tested it once, tested it twice, so it's going to be a support for them. So they will be looking for a way to engage long, and now some of them will engage, and when price go a little bit higher, they think they are on the right direction, and eventually we might just see a particular day that will just swept every all the retail trader that will be putting a position here, because on a higher time frame that look like a strong support. That is the idea behind that, and it is just trying to engineer liquidity. All right, so that is basically how I view that. And also, if we are looking higher, okay, let's continue. Now the algorithm also shows a willingness to price higher into the untapped fair value gap or CV or inefficiencies. Having that, we might conclude to see a higher resistant liquidity run on euro in tomorrow or next, meaning that we can see that there is willingness in price to go higher, but that willingness is not strong enough. Now, why it is a higher resistance liquidity run is that if you are going up, you will continue to meet a bearish order block, uh which might lead to slow in price, the slow movement on price. So going higher, we still have this 4 hour fair value gap that is very close to the weekly efficient price delivery, and also inside the daily bearish order block. So that is many things behind that area. And also, if we look at this, we don't have any PDRAs to support our higher price. So that is it. Let's go to the DXY. Before we go to the DSY, casting forward, we have the 4 hour ICT fair value gap that is inside the daily bullish order block, and also have a 4 hour swing high, which is a buy side resting below that level. So if the algorithm deliver price to that area, I am anticipating to see a continuation in price lower. So my 4 hour draw on liquidity is equals to buy side liquidity. Currently, my draw on liquidity on 4 hour is buy side liquidity, which is the major why price is going higher is the inefficiencies plus the fair value gap above. So we're trying to fill those inefficiencies and the fair value gap and the liquidity void. So basically, this is the XY 4 hourly contract. We can see how aggressively it is coming lower, and on the 4 hour we have a fair value gap here on the DXY. So, and we have the 4 hour fair value gap here. So we might see that as a potential area to sell, to be a seller if you trade the XY. And also, if you look, we have um the 4 hour bearish bullish breaker. All right, on the XY we have, which I mentioned this area yesterday. So if we eventually get to this area, it also will give us the idea that we will have an efficient price delivery on the weekly, and also we have sell side liquidity lying below here, and also this liquidity void will be completely filled. So my current draw liquidity on the XY is bearish, and if I'm to engage, my entry would be if I see price come into this fair value gap, and also my draw liquidity is this liquidity void and this bearish or this sell side liquidity here below inside this, that is the midpoint on this liquidity void, and consequently we can look at this bearish breaker. So let's see this. The this is the euro US dollar hourly contract. The euro US dollar hourly contract, the euro US dollar hourly contract shows nicely the intraday price delivery for Tuesday 6th February 2024. Now the daily profile is an obvious 2 o'clock AM New York local time as the high of the day that priced into the 4 hour ICT, so the 4 hour and 1 hour ICT fair value gap or CB, and leads to the decent sell program in today price. Now the best price to engage today was this sell program. You see how fast and how it's run on this low. We clear this low before we price rally higher. And also I call out this area yesterday, and we can see how we use that area efficiently. So I just leave this on so that I will use it to explain for this video. So I'm taking it off. So right now we have a buy side here, a short time buy side liquidity here, and let me make it. So we have short time buy side liquidity, and now on the hourly we can see that we have, well, sorry, let me continue. The low of the day is formed at 7 o'clock AM New York local time that swept the relative equal low and begin the higher resistance liquidity run. So we, this particular candle is the create the low in today price. Well, it did sweep this relative equal low and price begin to go higher, which is what I refer to as what, or what ICT refer to as what, higher resistance liquidity run, because we are going against the liquidity, the drawn liquidity on the weekly or and daily, on the weekly and daily. So it is a higher resistance liquidity run, and you can see how many hours we wasted here. A lower resistance liquidity run is fast in delivery. Look at how fast we are going lower, and now look how many hours we spend just to move from here to here. That is basically one of the greatest things you will learn going forward. Now casting forward, we can see that we have an hourly fair inversion fair value gap that, if we are bullish tomorrow, should set the leg for higher or for a decent buy program and higher delivery and higher price delivery. And if algorithm is seeking for short time buy side liquidity and also to fill the inefficiency, and my 1 hour draw on liquidity is equals to inefficiency plus buy side liquidity, and my 1 hour entry, which is the only PD array I can find, is the inversion 1 hour inversion fair value gap plus an 1 hour bullish order block, which is this particular candle. You we have one two, this down close candle, which the high is here. We can even see that there is a relationship between the low of this candle and the high of this candle. They tap on each other. So this is a bullish order block. But if we are going to go lower, I want to see this particular low taking, so we get into the consequent encroachment to go higher. That is, if the market is willing to give us a perfect entry or a perfect buy program. This is a fair value gap, and inversion fair value gap always work perfectly. So let's go to the DXY. So basically on the DXY, my time is almost done. So we can use this particular arrow I put here as the direction which I'm looking out for. So I want to see us open, then go higher, tap into this inversion, and also this bearish breaker that is here, which is this low high and lower low. So there is a bearish breaker here, which is this down close candle. Then if price get to it and also deliver us, then we have this bullish breaker here. So it's just perfect, and this just illustrates what I'm looking out for. So I do not have any time left to talk about other things. So I just talk about the most important thing to you guys. So I hope you find this video enticing, educative. So please, if you do, share this video and give us a like, subscribe to this channel, and give me a comment. Rate me. Just give me a comment. Let me know how improving this community is. Thank